And the confusion is that a lot of buyers out there think that they have to put down 20% in order to buy a home.
Hey everyone, Jamie with Sell for 1%, and joined as always, older brother Jason Barlow, father David Barlow. Lots of experience here, giving you some more information on real estate. We have a term of the week to go over here. Dave, you got a term of the week for us, right?
Yeah, this is one that we get lots of questions about, and there's actually a lot of misinformation out there about this term of the week. And the term of the week is down payment. And the confusion is that a lot of buyers out there think that they have to put down 20% in order to buy a home. And that's not true. The more you put down, then potentially the better your interest rate. I think we had Rich a couple of weeks ago say that if you put 40% down, that was the premium interest rate levels, depending on customers and things like that. And so, yeah, it does help with interest rates, but it's not something that you have to put down 20%. If most of our buyers are at 5%, most of our buyers go with conventional lending. So if you go through your mortgage broker or through your bank or your credit union, they're going to require a minimum 5% down in order to get you into that product. Now, the problem with that is that with only 5% down, then you end up with some sort of mortgage insurance that there's an underwriter on the back side that says, well, they didn't put down the 20%. We'll insure them against foreclosure for that difference. And so you're going to pay a few extra bucks in your mortgage payment each month if you don't put down the 20%. But 5% is a minimum on conventional loans. And then if you use a government product like FHA, for example, FHA down payment is going to be 3.5%. And there's even the Ohio Housing Authority, that OFA, that will help with part of your down payment. And so I think that they're still at 3%. Is that right, Jamie? Have you used them lately?
So OFA, I'm sorry, I'm going to jump in. I just went through this. OFA is giving back 5%.
Really?
So they can get 3.5% for their down payment and then 1.5% towards their closing costs.
Okay. So
and there is 3% no PMI, 5% no PMI conventional, but that's largely credit score driven.
Right.
So if you're a really strong borrower, you can get 5% down, no PMI. And like I said, some lenders have 3% down conventional, no PMI. And I'm sure you're going to get into USDA next.
Well, do they have to, on those no PMI, are those in opportunity zones that are being run by the city or by the bank?
No, the ones I've done, I mean, they have those available too.
Community builder. It's community builder loans.
Right.
But like a normal, like some, like these banks, like Third Federal or Key Bank, they'll have, they won't do 5% down, no PMI if your credit's, 640. But if your credit's 780, 790, like you're a good, solid citizen that pays their bills, they will do the no PMI 5% or 3% down, depending on the bank and what their rules are.
Okay. Well,
and I think, this is stuff that other realtors probably don't know. A lot of them probably do. We don't mean to hate on anyone, out there specifically.
I mean to hate.
But the reason you hook up with, us is we know this stuff. We know what lenders offer programs. You should be shopping around. I had a buyer that had a pre-approval, was doing 7% down. Sent it to my lender, and he's like, that doesn't really make any sense. You're just going to be losing 2% equity without gaining really anything from it. And so, again, that's not me saying it. That's the guy that knows more than me telling my client better. And these guys, same deal. So that's why we're here.
One of the things lenders have always told me, you guys may have heard the same thing about VA loans, that if you're a veteran and you have an available certificate, basically because you were discharged, under good conduct, that using your VA benefits is always the best way to finance your home. Have you guys heard anything different?
That's the first. VA is the best. I mean, VA is the absolute best. The biggest obstacle for, I'm sure Jamie too, and me as a buyer agent is, there's a lot of misinformation about how a VA loan works, and people think, oh, well, VA won't approve this house. And so VA has rehab loans. You can buy a fixer-upper VA. And now, depending on how much you have on your certificate, they let you buy a second home with it too.
Sure.
So, there's all kinds of nuances, and you get down into the weeds. I teach a lot of lenders how to do this stuff and to get these deals done. So, it's a very cool world when you get into this stuff.
And the neat thing about the VA loan is that you have smaller costs out of pocket, and you have zero down payment. And so, where you might be at 3.5% or 5% with somebody else, your VA loan is very minimal. But as Jay said, and I had a seller here about a month ago, we had a VA loan, come in. They were pretty much the highest and best offer that we had. And he was like, yeah, I don't know if I want to deal with VA. And I told him, I said, I've never had a problem with VA. In fact, because of their service to our country, I kind of root for the guys with a VA. And I give them preference, if it's heads up, this guy's at $300,000, this guy's at $300,000, I'm going to push for the VA guy to get the deal because of a couple things. One, their service to our country. But secondly, typically those veterans are very disciplined, and they come by it naturally because they were in the military. And the discipline part of it is that they normally have cash in the bank. They're very regimented. They, they monitor their stuff, and they tend to be good citizens. So again, that's my own personal preference. And for sellers out there, look at the VAs because I think those guys are good risk. The next one.
Before you move on, I got one more thing for you on VA. The other thing that sellers don't know about and agents don't know about that's really a benefit is called Tidewater. So, if you're doing a conventional loan or an FHA loan, us as listing agents, we're waiting on the appraisal to come back. And once you get that number, it's awfully hard to unwind it and contest it. If the VA appraiser is coming in for less than our price in the contract, they actually, by rule, pick up the phone and call us and say, hey, why did you price it this way? Why is it selling this high? And now you got a chance to explain to the appraiser why it's worth this price. And that will save sellers tons of money on the backside versus some conventional appraiser coming in and blowing the deal up. So that's my last 2 cents on the VA, old man.
Yeah, if there's the rule there, that's good. In all honesty, the conventional or the FHA appraiser could pick up the phone and call us as well to try to find out why. We can't talk to them after they issue the appraisal, but we can talk to them prior to the point of issuing the appraisal. And so it would seem like those appraisers would be smart to say, hey, Dave, my current number is, and I've had some appraisers do that as they were going out. And I get lots of appraisers that call and say, oh, we want to use this house as a comp. Can you tell me about it? So anyways, the smart appraisers do that. The last one I want to talk about here real quick as far as financing, and Jay, you just mentioned it, is FHA financing. And FHA financing has its own little world. In fact, I think FHA now is the largest insurer of loans across the country now since the demise of Fannie Mae and Freddie Mac. Now, they're still out there, but FHA, I think, does more loans across the country than any other loan source out there. The advantage to FHA for a buyer is typically your loan to debt income is better. So like a conventional might be in that 40% range. I've seen FHA deals come in at 50%, depending on, again, situations. But basically, it just means that you can buy a little more home with a little more debt to income ratio than you can with a conventional loan. The other thing is
not as good credit.
I'm sorry?
Is that what you were moving on to there? I apologize for interrupting. I was going to say the credit threshold is also not as stringent as with a conventional loan for FHA.
And the interesting thing,
there is no minimum.
Right. And I was just going to say that we worked with a lender a number of years ago, and he was big on overlays. And every lender has what's called overlays. So they're going to make a loan based on A, B, C, D, and these are their overlays. The one thing that people don't know is that FHA does not have a minimum credit score in order for them to insure the loan. That's all part of that overlay that the lender puts into place. And so 3 or 4 years ago, every lender was at 620, was their minimum score. And now we are starting to see lenders come back into the 580 credit score with FHA financing. And so that's a lender thing specifically as far as credit scores.
I've seen some at 650 for FHA. And again, that's their overlay.
That's their risk tolerance.
Right. And then as the lenders, kind of need more business, they lower that threshold to get more loans in. That lender at Dad's talking about, that was Mark Atanasoff with Bank Ohio. And we did an FHA rehab loan, and my client's credit was 550. And so I closed that deal. They fixed the house up, and a couple of years later sold it and made $100,000 in profit on that house.
Yeah, so it just depends on your situation. And every situation is going to be a little bit different. I fibbed to you. I got one more. USDA. USDA is designated zones outside of the city limits. And so here's an interesting one for you guys. For your sister who lives up in Delaware County, I won't talk about the road that she lives on. And I was talking to her. I said, you might think about doing a USDA loan if you wanted to buy that house. The USDA loan on her side of the street is not eligible because it's considered to be in the city limit. On the other side of the street, it's USDA eligible. And it's just
all the farmland, all the agriculture is?
Well, I mean,
they've drawn their maps.
Yeah, she's still in the farmland. It's just they use that street down the middle.
Perfect.
This is the split.
It typically goes that way more than the other, I have found.
Yeah, and the USDA is an awesome product. Now that one has tighter income to debt ratios than FHA.
Yep.
And so that's the major difference, on what you can qualify for on those. But yeah,
if you're out looking in the rural areas, it's a great product because it's a lot like the VA. There's no down payment. They're minimal on their closing costs and so on and so forth. And, if you'd rather keep your money in your pocket than to put it into the bank's pocket as far as down payment, USDA is a great way to go. So,
yeah, the USDA has an awesome, that's one that you go on their website, you type in the address, and it's interesting what you're saying about that one in Delaware. We're putting one up in North Baltimore, Ohio, and it's in the center of town on Main Street. It all qualifies USDA. And so as long as you don't have high debt, we can get you into that house for no money down.
Well, that's the difference between being a city and possibly an unincorporated village that Baltimore might be. So I think, probably Radnor and other areas like that, Croton would be
township. Different townships have different lines drawn in the sand.
It's regulated by the federal government. They're the ones that draw the lines, kind of like floodplains. Floodplains are all regulated by the Army Corps of Engineers. And so,
Yep.
so they're drawing the line and saying this is it or this isn't. But the key being, if you're looking at something kind of out in the country, don't forget about USDA financing. So we have conventional, we have VA, we have FHA, we have USDA, and actually there's a whole gamut of other products that are available.
Don't forget portfolio.
Yeah. And that's part of the other products that are available to you in order to purchase your home. And depending on your situation, very likely we can help point you in the right direction, talk to the right lender to get you into the product that best fits your needs. And as Jamie said a little bit earlier, we're not beating up on other realtors, but their experience is the big thing that we bring to the table to be able to get you pointed in the right direction. Real quick example, about 6 months ago, I helped another realtor get approved for a loan. They went to their go-to lender. About 2 weeks before closing, something happened. Actually, what they found out was the husband had changed jobs, but was not being included in full-time at his new job because he was hired by a service. And so he was under the employment of this service company and not the actual employer. And so they weren't able to do the loan the way that they wanted. They were going to use their VA benefits. I had him call one of our go-to lenders, and he got them done. And they're living in the home now. And so we like to say we're the realtor's realtor, which we sell actually a pretty interesting number of homes for other realtors out and about. And so anyways, long story short is, if you like this kind of information, you want more information, you can call us. You can also hit that like and subscribe button to get more information like this on a weekly basis as we produce more content. But give us a call. We'd love to be able to help you get you into your dream home and point you in the right direction, get you to the best terms possible when getting your loan. So anyways, we'll talk to you guys next week. Thanks, guys.